Are we gonna buy the dip in Adobe stock? After reporting earnings today, stock went down over 10%. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. It's time to talk about Adobe. This company just reported earnings. Like we said, they came in at $4.1 billion. That's good for 20% year-over-year growth on that revenue side. I don't necessarily think that's what's weighing on investors and sending this stock lower. It was really the Q1 outlook and the fiscal year 2022 outlook that I think our investors are weighing on. And we'll talk about that broadly here in a second. We'll take a look at these revenues. We'll take a look at the gross margins, which you know are absolutely sensational over at Adobe. And we've got to look at this from a technical perspective as well. This one's made an interesting formation, and it's actually pulled back to an area where it's either likely to bounce or actually likely to head lower at this position. So we'll talk about that. Can we get this stock now? Or can we wait for lower prices? I think we've got some decisions to make when we look at Adobe. So these Q4 numbers came in. We've got $4.1 billion. That's 20% year-over-year revenue growth rate. Now, we'll have to keep that in mind when we look at other major FANG stocks like a Microsoft, like a Google, like a Facebook, even like Apple and Amazon. Well, this company not quite growing at an elite level. 20% is nothing to sneeze at. But what I think investors are digesting at is the Q1 outlook. So that's the upcoming quarter. So the most recent quarter that just got completed, we did $4.11 billion worth of revenue. The upcoming quarter, Adobe is expected to do $4.23 billion. Now, the street was expecting $4.34 billion. So coming up a little bit light there as well. And the fiscal year 2022 revenue is expected to come in at $17.9 billion. The street was expecting $18.16 billion. So again, coming up light there in terms of what investors were expecting. Now, the stock reacted very negatively. And when that happens, when a company misses on this guidance and then the stock really reacts negatively, what I like to do is wait until the earnings call transcript comes out. And you can get these sometimes on the company websites. I tend to come here to Seeking Alpha. I don't have any affiliation to this site. They don't pay me any money. In fact, I have to pay them for a subscription to these types of things. But I like coming here because I get to read it if I want to. I also can play an audio version of it. Now, what I will tell you about these earnings call, it's much like listening to a politician, okay? The first, thousands, we're talking about thousands of words is basically them talking about how great their products are, how big their total addressable market is, how wonderful things are over at Adobe, but we just showed you, okay? 20% year-over-year growth rate. That's on the low end of what FANG is producing, and their outlook and their guidance came up underneath what the street was expecting. So obviously, when you come down here to the question and answer section, which is the last segment of a conference call, I typically just skip right to that and I read what the analysts are asking. And quite frankly, they did a nice job almost immediately asking executives over at Adobe, why the light guidance? Why are we coming underneath this? Now, the two excuses that they had over at Adobe was number one, the upcoming fiscal year has 52 weeks versus 53 in the previous period. So that is going to subtract some revenue that would have been there. Also, they talked a lot about foreign exchange rates. The fact that the dollar is strengthening against other currencies. Now, we're not going to get in a macro discussion today on currencies around the world, but it can play havoc, especially when you have central banks doing what they're doing, tightening, raising interest rates, lowering interest rates. That can really play on the value of a currency. And I think over the coming years, CFOs over at companies are really going to start earning their money in terms of the hedges that they make in order to try to mitigate the impacts that those will have on earnings. So those were the excuses Adobe gave, and we'll see if that materializes over the coming years ahead. Now, before we get into these earnings, take a look at the revenues, the gross margins, which you know are just spectacular over at Adobe. What I did want to do is just very broadly, okay, as you guys know, if you've been following this channel for a long time, you know I'm really overweight all the major FANG stocks, Microsoft, Tesla included, and I don't have any shares of Adobe, and not because I don't admire this company and its products and its gross margins and its balance sheet and pretty much everything that it has going on here from a financial perspective, you're going to want to stick around for this. This is almost as good as it gets. And I say almost, I can think of two companies that I think are probably a little bit better. You got Microsoft and Google. Now, I'm not comparing what these companies do from a software or product perspective because they all do things a little bit differently, but they remind me very much of each other from a gross margin perspective and a profits perspective. And what I noticed about Adobe, it still trades at a premium to both Microsoft, which is here in the blue time. I've got a price to earnings basis. I've got a 3-year chart right now. This is saying that the trailing 12-month PE on Microsoft is at 37.4. Google, which quite frankly actually has the highest growth rate out of this three and is wildly profitable, as we know, trades at just 28 times trailing 12 months. And Adobe trades at a very large premium at 52 times trailing 12 months price to earnings. That is why I haven't pulled the trigger on Adobe, because in my opinion, it's still a little expensive compared to other companies that have larger growth rates on that revenue side, that have more cash in the bank, that have probably a larger total addressable market, and certainly have larger buybacks and dividends and all those things we love as shareholder. Now, we're not throwing any shade over at Adobe, because when you look at these financials, you are going to absolutely fall in love. Take a look at this, $4.1 billion on that revenue side. This is our most recent quarter here on this left-hand column. Because this was Q4, we get a year-end view on the two right-hand columns. So we got this $4.1 billion, and what we absolutely love about Adobe, take a look at these gross margins. Look at this. Total cost of revenue. So off this $4.1 billion, because this is basically a pure software company, they have almost no cost on that software. Just $507 million to generate $4.1 billion. Oh my goodness, that is absolutely amazing. Okay, so you got gross profit of $4.1 billion. You've got gross profits of $3.6 billion. Quite frankly, it's hard to say that with a straight face. And quite frankly, the only two, and I wouldn't say only, but two of the most prime examples of what reminds me of this, and the reason why I had Microsoft and Google up here from a valuation comparison, is those are two companies that remind me, when I go through their financials, this is what it reminds me of. And that's why we like Adobe. And I think if you can get this one at the right price and from a right technical perspective, you're going to make a lot of money in this stock, because with these types of gross margin, it gives you a lot of leeway. What we also absolutely admire and love about Adobe is this stock has been around a long time. This company has what I would say is some like legacy products. It's almost like Windows on your computer, okay? And so we've got research and development, sales and marketing, and general administrative costs on this operating side. But these have barely budged over the last year. We went from $1.78 billion up to just $2.1 billion. Over the full year, you went from roughly $7 billion up to $8.1 billion. Those are minuscule increases, especially when you factor in this revenue growth up here is really strong, and the fact that the cost of revenues have really not even budged over the last year. So that gives you operating income in the most recent quarter. So we've got $4.1 billion on our revenue side. We minus off this $507 million. We minus off our operating expenses of $2.1 billion. Off that $4.1 billion worth of revenue, we've got $1.5 billion worth of operating income. In the previous period, we're sitting closer to $1.2 billion. You see, for the last 12 months, you went from 4.2 up to $5.8 billion. This company is just like a steady train rolling down the track. The track goes forever, and it just keeps going and going and going. Quite frankly, it reminds me so much of Microsoft. It reminds me so much of Google that I just want to get this at a fair, what I believe to be a fair valuation. And then I think you're making a really solid decision as an investor. Now, from a balance sheet perspective, it's nice. It's not nearly as good as the other companies I mentioned, because those companies have even more cash than this. This is another reason why I haven't piled into Adobe stock, because my dollar loves companies that have absolutely smoking hot balance sheets. And this is really good. Take a look at our total current assets. It went from 8.1 up to this $8.6 billion. I'll show you on cash flows where some of this cash is going and what they're using it for, because when you have this just absolutely fantastic gross margin and you've got fantastic operating results, and you could even come down here after you pay taxes and interest and all that stuff, you got great net income numbers as well. Well, that cash is being used somewhere. And so we'll talk about that when we look at cash flows. From a liability perspective, very, very small amount of debt, about $4.1 billion. That is sitting there. It's something that they could probably leverage up over at Adobe. There's probably banks that would line up around the street to loan this company money if it had a reason to borrow money, if they could make an acquisition, if they could do something like that, which in today's regulatory environment, quite frankly, is a little bit difficult. So they're typically growing organically, although they do make acquisitions over at Adobe. Now, from a cash flow perspective, paints absolutely a glorious picture. You pull down that net income number over the last 3 months of $1.2 billion. Last year was a little bit elevated. They had another line on that net income side. I think they disposed of a business and made some money when they did that. So we can't really compare it year over year, but man, that cash flows from operations coming in at $2 billion. Obviously, you're adding back in depreciation and stock-based compensation, which is not egregious at all. You went from $233 million worth of stock-based compensation up to just $270. That's why we like these legacy tech plays. I don't like, and if you follow this channel for any length of time, I don't like the startup tech plays that have a crazy valuation, that have crazy stock-based compensation, that have expenses just keep going up and up like it's a SpaceX rocket. Okay, I like these companies that are a well-oiled machine and are just chugging down the track. That's what we see when we look at Adobe. They're just printing cash, okay? It's like the Federal Reserve. These guys are just printing cash and printing cash. Now, what they are using some of that cash for is they are repurchasing the stock. We see in the most recent quarter, they bought back $1 billion worth of stock. Now, since 2018, they've actually bought back over $12 billion worth of stock, and they have over $13 billion left on an authorized buyback. What we have to keep in mind, though, they have a $13 billion buyback that they can still execute, but on the total current asset side, and especially when you look at just cash, this is a company with not nearly enough money to execute that buyback in a short period of time. So it isn't going to be a slow process in order to execute that buyback, but you do have that support underneath the shares, considering that is likely something that they will execute over a long period of time over at Adobe. Now, from a technical perspective, this stock is painting a very, I wouldn't say a worrisome story, but it is an interesting one. This stock, once it broke to all-time highs, if you follow our channel, you look at stocks like Facebook, when they broke to all-time highs, they rallied super hard. We just see recently Apple has broken out to all-time highs and the stock tends to rally. You can bring up a chart of NVIDIA as well. When you broke to all-time highs, the stock rallies, but what ends up happening is you hit some level of resistance, sellers step in, and the stock came crashing down, and we came all the way back down to basically very close to our previous levels of highs, which are really at 531, but for all intents and purposes are closer to about 560. Then we rallied hard. This was just back in October on this one. We went from 560 all the way back up to the 670, 680 level, all the way back to find ourselves back down here at 560. So one thing that we could assume is take a look at Adobe over the last year. This was back in 2020. The stock did a lot of what we saw with major FANG stocks. When you look at the chart of Amazon, when you look at the chart of Facebook, you look at the chart of Apple, it chopped sideways for a long period of time, and some of those stocks have broken out. And that's what Adobe did. Now, what we could do is we could just be simply now consolidating in what can be perceived as a higher range. So instead of consolidating down here from 460 to about 530, now we're consolidating between about 560 and 670. And so if you want to buy it down here, if you believe that is likely the trend going forward, well, this can be a buying opportunity. What I will say from a technical perspective, though, if we break this level of 560, wouldn't be super concerned. It's really when you get down here to about 530, again, I would expect some buyers buyers to step in down at this level. If for some reason we get rate hikes that really hurt the market, if we get a macro environment, because when we looked at these financials, there's nothing necessarily that Adobe's going to do over the coming weeks and months ahead that's really going to negatively impact this stock. I think you're going to have a broader market sell-off and broader market volatility that could send stocks like this lower. You're looking for a break below 530. You get any break below 530 and you're coming back into this sideways consolidation, which we did from August of 2020 up until earlier this year and about the summertime of 2021. Well, I think this would be a fantastic area to buy the stock. Will we get that opportunity? I don't necessarily think that will be the case. I think we have a higher probability of consolidating in this upper range. And if you are comfortable with paying a multiple on Adobe that exceeds other software and other high growth tech stocks like a Microsoft and a Google, well, then you can step in on this one. But me, quite frankly, even though I'm already overweight on Google stock, even though I'm somewhat overweight on Microsoft, and when you expand that out to the other major FANG stocks, well, I tell you what, these stocks are growing at or greater than what Adobe is doing. They have more cash. They have more ability to execute a buyback over a shorter period of time. Some of them are paying dividend. And quite frankly, I think some of them, especially when you look at Adobe and a Microsoft and certainly an Apple and an Amazon, these companies have absolutely dominant positions in their market. While I think Adobe has an absolute dominant position in its market as well, it's just not quite as big of a total addressable market. That's why we have revenues of just $4 billion. And when you're looking at companies like Facebook, they're closer to $40 billion. So I like Adobe. I love Adobe. If the valuation and this stock price continue to decline, I will add this one to my portfolio. Right now, I'm going to be on the sidelines and wait. Let me know down in the comments what you think about this one. Hopefully you guys enjoyed this video. Good luck with your investments.